Good morning. My name is Unonzaliseko Manzana. I am the director of Inzaliseko Business Center, the IBC practice, and a registered tax practitioner and a commissioner of oath. Welcome to today's recording where we are going to be focusing on the individual tax framework. Now, the purpose of this presentation is to give the taxpayers an overview of how the individual tax computations are designed, so as to give them an idea on how one can reduce their income tax liability by planning their tax affairs. I would like for you to also look into this disclaimer. It is very important that you understand that this presentation does not qualify as a professional tax advice. The information contained herein is meant to give the taxpayer an idea of how their taxable income is concluded on. Now, for a professional tax advice, one will be required to contact our offices and set up an appointment with our tax consultant where we will look specifically into their tax profile to determine their specific taxable income. I would like for us to look into these two terms. It's very important for one to understand the difference, especially when one is planning their tax affairs. The first word that I want us to look into is tax evasion. Now, tax evasion is an illegal activity in which a person or an entity deliberately avoids paying a true tax liability. If you look at Section 235 of the Tax Administration Act, it provides that it is a criminal offense for a person with intent to evade tax or assist another person to evade tax or obtain an undue refund. So the second word that I want us to look into is tax avoidance. Now, tax avoidance is the legal use of legal methods to minimize the amount of income tax owed by an individual or an entity. So after looking into these two terms, we can conclude that tax avoidance is when a taxpayer arranges his or her affairs in a legal manner to reduce his or her tax liability, whereas tax evasion is an illegal activity where a taxpayer frees him or herself from a tax burden. Now, you must note that tax evasion is considered a punishable criminal offense and can have consequences of penalties up to 200%. Now, coming into the tax framework itself, I have categorized this first slide into 4 steps. This is just so you can have an understanding really, or just make it easier for you to be able to map your way around your taxable income. But it doesn't end on those 4 steps, as you would see on our next slide. So the first thing that they do, which I've titled step 1, is they would take your gross income. Now, gross income is defined in Section 1 of the Tax Administration Act is that it is a total amount in cash or otherwise received by or accrued to a resident during a year of assessment which is not of capital nature. Now, all the money that you have received for that particular year as income, be it your interest on your savings account, your dividends from the investments that you have made, your just any money that you would think of that will qualify as income for that particular year will be added into your gross income. Now, the second step that they would do is they would lessen that amount, which is now lessening your total gross income by your exempt income. Your exempt income is obviously a non-taxable income. Examples would be your South African dividends or South African interest as applicable. Now, you must understand when we say is applicable in your South African interest, there is a portion there that is exempt, and obviously the difference will be taxable. Now we go to the next step, which I have titled step number 3. Here there will be deductions and allowable deductions, right? Or deductible expenses, right? Now, these your common deductions would be your retirement annuity, pension contribution, provident fund contribution, etc. We'll also look into your travel allowances, your home office expenses, donations to Section 18 NPO or NPC, your medical aid contributions for yourself or for someone else. Now, for someone else means that if you are taking care of an elderly person where you are the main contributor on their medical aid, you will qualify for a credit on your personal income tax, right? You will be credited on your personal capacity for the purpose of reducing your taxable income, though you are not the main member. But there are some of the specifications around that clause that will qualify for credit. Take all the taxable capital gain. If you've maybe sold some of your assets on that particular year of assessment, there is a portion there that is taxable, which is the amount you will add on the difference between your gross income less your exempt income, your deductible expenses or allowances or credits. So you will come to your taxable income. Now, after the taxable income, you will lessen it with a rebate. Now, each and every year, during the budget speech, the finance minister will release as to how much the rebate will be for that particular year. And the rebates, obviously, they differ from age to age. We've got your primary rebates, which only concentrate to people below the age of 65 years. We've got your secondary rebate, which obviously speak to people who are 65 years to 75 years. And your tertiary rebates, obviously, is for people who are 75 years and above. So if you are 75, you will qualify for primary, secondary, and tertiary. If you are 65, between 65 and 75, you will qualify for primary and secondary. If you are below 65, you will only qualify for primary. And then from there, the total amount that they are going to get from there will be the taxable. All right, and I would like to believe that the information that we have given you today will be able to give you an insight on how your tax is concluded on, or your taxable income is concluded on. I would like to believe that it will be very helpful to you. And you must understand now, from last year 2020 and this year as well 2021, SARS is going to be issuing auto assessments. So when they send you an SMS to either accept the auto assessment or decline the auto assessment, when you decline the automatic assessment, this is you saying, I do not agree with the figures that SARS has concluded on. Or if you accept it, this is you saying, I do agree with the figures that SARS has concluded on, and I accept this as my final assessment. Now, you will not be able to make that decision if you are not aware of how your taxable income is concluded on, because once you have at least the framework, the inside of the framework, you will be able to have an idea of how much you are going to be taxed or how much will be due to you from SARS. Once more from me, Unonzalise Komanzana. Thank you so much for your time. Have a safe one.